What can a Century 21 agent do for you? They explain the market, love a good barbie and never drink milk from the carton. They do your homework, your legwork and sometimes yard work. So invite one over. Century 21 agents. Smarter, bolder, faster.
Welcome back to Your Property Empire. Now, joining me on the show tonight is Lee Hatton, CEO of Eubank, and we've just been joined by the birthday boy, Charles Tarbey himself, chairman and owner of Century 21.
You weren't supposed to mention that.
Oh, was not supposed to mention it?
I'm not telling you.
We've just done it on national
Have a guessing
news.
competition. You can give away one of your free books.
Of how old Charles Tarbey is.
Yeah, give away one of your free books.
Put in your vote. It's anywhere between 1 and 70.
It is.
Yeah.
Absolutely is.
Now, just very quickly, you've been chatting with Bill Shorten, is that right?
I haven't been, but I've been chatting about him, that's for sure, with the negative gearing aspect.
And what are your thoughts?
Well, yesterday a journalist got me at probably just after I had a lunch on Sunday in Adelaide, so I had a lot to say, particularly about government policy and policies that seem to be put in place well after the event has already occurred. You know, we're way past this process of saving people, they're giving them the opportunity to buy their first home and all of that stuff that goes on. I mean, they're talking about this way after the event. Oh, the Sydney, all the prices have gotten too high. Hey guys, that happened last year. You come into an election, you come up with some scheme about negative gearing. Look, the government have not been great at providing housing themselves. If they cut the investors out some way or another, they're going to have to do it themselves. It's going to become more expensive and it's going to be run by a government department, and look, history shows that the cost of that is going to be significantly higher than the tax benefits they're going to get from investors. So look, let's get on with real life and stop mucking around with policy that seems to have worked for many, many years.
So,
did I say enough?
We'll have a whole show about
I was getting pretty aggressive.
I think you summarised that well.
I was getting pretty aggressive.
So we'll get you sober next week, and then we'll do a whole show on it.
Sounds
when we
good to
put
me.
you on for
Sounds
the
good to me. If we get Bill on, I don't think he's going to grace us with his company.
You invite him on if you want.
Yeah,
then
nice.
that's
It's a good
fine.
invite.
Whether it's Bill or somebody from the Liberal Party, it doesn't matter. It's just about the policy. It's just about the policy.
Now, Charles was talking obviously about the results from last year.
Yeah.
We obviously get Charles's results and RP Data's. What were your results, or how did you see the market for the end of last year?
So we have the NAB residential property survey that we send out, and what we found actually, or what we're predicting in terms of the year to come, is that it'll soften, it'll cool off quite a bit. And so we think at early kind of indications, we thought originally it might be at about 2.3% housing price growth, but now we actually think it'll be around 1%.
Okay.
Yeah.
And again, just to remind people, that's an average across the whole nation.
Yeah, that's absolutely
And so some
right.
areas are going to do well, some areas are going to do bad.
Yeah, absolutely. And one of the surprising pieces in that is that we saw Queensland looking to have a bit more of a favourable result, up around the 2 to 3%, which, you know, I think for a number of people where they see Queensland really cooling off, to see that change was really, really interesting.
Yeah, I was quite surprised, Charles, because I saw Dr. Andrew Wilson from Domain earlier on for breakfast this week, and I think Residex as well we had on a couple of weeks ago, and their thing was they thought Sydney was still going to be really good and Melbourne was going to be the one. I thought Brisbane was going to be the one with a nightmare with the thousands of brand new units.
Oh, I see.
What are your thoughts?
Yeah, and Andrew Wilson knows what he's talking about too. He's very well researched. I actually don't think too many of the regions are going to struggle at all. I think there's going to be modest growth across the country, and I think when we talk about it being 1%, I don't think that's inaccurate, because there's going to be a bit of a fall in some areas first before you get... So it could be growth higher than that, but from an overall percentage. I think that the area that's going to struggle most with apartments is not just Sydney, but Melbourne. Melbourne's going to cop it. But the Brisbane market, the one thing I like about the Brisbane market is that its prices didn't go crazy, whereas other parts of Australia they did. So I think that Brisbane will get through it reasonably comfortably. I don't see it as a major issue. I don't see any part of Australia. Perth is correcting incredibly at the moment. There's a lot of negative mortgages there, and a couple of suburbs that even Bank West have stopped lending in, and they're from WA. So that's going to be actually good, because it's going to stabilise the prices very quickly in Perth, and that can move upwards from there. Yeah,
and I don't think we can forget that we're coming off the back of like 3 years of double-digit growth, right? So I think it really is that
if it drops 5%,
adjustment.
it's still a positive 40%.
Well, that's the whole piece, right? It's still doing well.
Can I tell you something? My daughter bought an apartment here in Sydney, and I went back and researched, and it was almost 10 years ago to the day that from when she bought it, and what she paid for it was twice the price that the people bought it for 10 years ago. So although we've had double-digit growth, and she bought it at the top of the market towards the end of late last year, I think we've just reached where we should have reached. That's all I think it is.
Yeah,
and
I think it's on the dollar.
Yeah.
So I wrote my book 2008, and I said the average price property is $500,000.
Yeah.
7 years later, it's now $1 million.
It's $1 million.
I don't think it's gone. We've had massive growth.
No.
It just
been
happens
okay.
quickly. It just happens in a short space of time, and it looks like it's going crazy. And that's when all these government policies come out. Did I tell you about those? Where they want to introduce...
Sudden panic.
Right. Anyway, look, let's talk about that another time, shall we?
Jumping back to you back quickly. So how do you see a lot of your customers and maybe some of the foreign buyers trying to work out what's going on? Because everyone's getting all these mixed messages, and the poor consumer out on the street, they're pretty confused.
So with foreign investors in particular, we've seen them kind of not struggling with the volatility, but really trying to understand it. But I think that's kind of driven by everything that's going on in the big wide world, right? So you've got this kind of real global economy where people are trying to understand what's going on. I mean, we saw what happened to Deutsche Bank last week with their share price. You've got the equities piece all going on. And then in addition to that, you've got what's happening in the regulatory world for banks and for pricing. So I think a number of those things are really starting to play into it. And again, in the survey, we saw that that was slowing down for foreign investment.
Charles, let's jump to your clearance rates, your auction rates, because I want to see where their slowing is. Because
Actually,
from
yeah.
what I hear, the rates are quite high.
It's not slowed down. You know, across the country, there was a 72.3% clearance rate. No, this time last year was 72.3%.
That sounds pretty healthy to me.
Yes, and it was 74% last year, so not a lot of difference. And you think that the top of the tree would be Sydney or Melbourne, but it's not. Sydney actually beat Melbourne this week for a change, 78.6%. Melbourne came in at 73.6%. But the winner at 81.4% clearance rate is the wonderful city of Adelaide, which is where I was yesterday and where I was discussing Bill Shorten with a journalist.
Everyone's always wanting us to talk about
run.
the rest of Australia. Adelaide, 80%.
81.4%. So
Pretty good.
there you go. Much better than
My
this time
poor friend
last year.
Lauren missed out on a $1.8 million property.
Right.
Obviously
Yeah, how do you
needs to
miss
spend
out
more,
on a
and she needs
$1.8
to be
million
quick.
property? Yeah.
Yep. Homes advertised for sale.
That's actually good too, 4.45% increase for Australia, and we had a 3.9% increase in New Zealand, mostly in Auckland. So the stock levels have started to climb again, so that's really great. You're part of the world, Auckland, or are you from... You're from Auckland or somewhere else in New Zealand? Are you from Tutu?
No, I'm not. I'm from Whakatane.
Whakatane or Whangarei. We've got it worked out. One of those places. So it's growing. Stock levels are growing, which is, again, great. And I think that's what we need. So I think the clearance rates will probably slow down a little bit, but not a lot. I think there's a lot of people still interested out there.
Yeah, sounds good. And rent price?
Yeah, the big winners this week were Victoria, had a 0.42% increase, but the best one was Northern Territory at a 0.87% increase over this time last week. Whether the prices and people are a bit nervous down there up there about buying, and so they're renting, so the rents are pushing up a little bit. But this time last week it's up 0.24%, but again, since the start of the year there's been really no movement, so it's flat for the year to date. But those are the two capital cities that had the best growth.
Okay, and vacancy rates?
Yeah, 2.01 for Sydney, always great. Melbourne 3.08, but Perth is still high, 6.63, but back from over 7s this time last week, and that's an average over those three capital cities of 3.91% for vacancy rate. So pretty good. Pretty good.
It sounds a pretty good market. Yeah. And you're seeing exactly the same? No panics in your world?
No, absolutely no panics. It's always nice to keep it nice and smooth. I think, as we saw though, if there is this softening that goes on, I think the market is well and truly ready for it.
And it's good to hear as well that suddenly all this news coming out with all these politicians, that suddenly you're not suddenly panicking. And that's why I think it's great having the banks on to see you're the guys with the money that should be worrying if anyone is worrying. Yeah,
absolutely. And I think it's just important to, well, what did they say? Just keep calm and carry on. I think what's really, really good is that we're looking at all the global indicators and we're focused on Australia, right? So we're really looking at what's happening in Australia.
Nice to see.
That's good. Lee Hatton from CEO of Eubank, thank you very much. And the birthday boy, Charles Tarbey.
Thank you, Chris.
Thank you for joining us after your long lunch.
Oh, yeah, very.
Thanks for joining us at home. We'll see you again next week when we'll have a big debate with Charles Tarbey and we'll see if we can get Mr Shorten in to have a bit of a chat as well. Until next week, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.